a very firm decision. I made a firm decision to focus on early childhood education. And the reason for this is because I am a mom. My son is now 9 years old. And for the longest time, I have relied on early childhood education from his infancy until he started kindergarten. So I believe the providers do a wonderful job, and it helps rid the parents, especially for me. It was just getting rid of mommy guilt for me. And so I'm forever thankful to providers in this field. Could we go to the next field? Next slide, please. So a little about me. I've been a CPA for the longest time, over 20 years. I'm originally from Kenya, that's in East Africa. And therefore, that's why my accent sounds a little different. I love being in accounting. I love numbers. But like I said, I enjoy working with providers in the industry. Next slide, please. So let's look at our learning objectives for today's training. So the first part is we want to understand what a budget is, okay? And we're going to go through the process of creating a budget for your family childcare facility. Now, with that, once we create the budget, I urge you to not just set it aside, save it somewhere in your computer and forget about it. I'd like it to use it as a living and breathing tool that you can monitor and adjust depending on the circumstances of your family childcare. Another thing that I would like to introduce today is the time-space calculation. This is a very important calculation for family childcare home providers. And the big reason around this is that it helps actually to save you money on your taxes. So not only do you want to make sure you are running a profitable business, but that you're also taking advantage of any tax deductions that are favorable to you. Next slide, please. So let's start with the definition of a budget. So a budget is a detailed financial plan. So it will outline what your revenue or your income is, and also it will outline your projected expenses as you operate your home childcare business. So we are going to spread this over for today's session, we'll use a 12-month period. But to be honest, a budget can be any period that you choose. You could set up a budget for 3 months, 6 months, depending on your business needs at the time. But typically, I see most budgets cover a 12-month period. Next slide. So a couple of things to consider when you're creating your budget, okay? I would like you to have a conservative view of the budget. And this means that you do not really want to overstate your income, okay? You want to understate it just in case things happen along the way that are unfavorable. You want to make sure that your business can still sustain unfavorable situations and still, be a going concern. The second thing is you want to overstate your expenses. So understate your revenue, overstate your expenses. And in between that, hopefully you end up with a surplus cash situation where you can start saving money for various reasons. You might want to invest on expanding your family childcare business, or you might also want to set aside money for things like taxes. So always look at having difference between your revenue and expenses on a positive side. Another thing to take into consideration is once you have created the budget, like I mentioned, you want to implement a system of constantly monitoring this budget versus your actual expenses and then making adjustments as needed. Next slide. So let's get into the budget prepping process. Now, I want you to start with the end in mind. Think about your business. how much money or revenue do you want your business to generate in a given year? I, for the purposes of this training, have picked on a number 200,000, but it could be any number that you realistically think you can generate as revenue for your business. Okay, so what we're going to do is start with the end in mind and then reverse engineer it down to the smallest factor. Okay, so when it comes to the childcare business, the biggest key driver for your revenue is the number of children you enroll in your home or in your family childcare business. So that number is what will drive your revenue. The second thing that will drive your revenue is going to be how much tuition you will charge. Now, in the DC market, you have the opportunity to enroll subsidized kids. This means that these are children that are supported by the DC government through Aussie, and as a provider, you get reimbursed at a given rate. Okay, so you might also choose to only serve private students. And this kind of gives you a lot of flexibility in terms of how much to charge and who to bring to your facility. The one thing I like about subsidized care is that it gives you stability in your revenue. But then again, that is a decision you make as a business owner. But the part about the subsidized care that is very beneficial to owners is that now you know how much to charge. And of course, you have to keep to the rules of licensure and make sure you are updating your information wherever needed so that you can get your reimbursements on time. If you're on the private pay option, you want to be cognizant of the tuition rates. You don't want to overcharge to price yourself out of market. But again, if you're in an area where you can get paid adequately, do the market research and get to know the area, the demographics, and whether the parents can afford your rates. Okay. One last thing is, please don't forget the grants. The childcare industry has certain grants, and depending on the state that providers are always entitled to. Examples could be the food program or any other grants that could be going on. LIIF is also very, very supportive for providers. So if you understand that there could be some grants for expansion, for training for your organization, please take advantage of this because this will definitely build your home childcare business, and you can definitely grow through grants. Next slide, please. Okay, so today I'm going to walk you through the process of setting up and creating a budget. I'm going to make certain assumptions because I'm just going to walk through an example of what a budget can be for a provider. We're going to assume that this particular home family childcare home provider has a capacity of 10 children and actually has enrolled their 10. So she's very fortunate that she's able to operate at full capacity. I'm going to use the gender for the female side because typically in this industry, we have a lot of women that run the childcare centers. But that doesn't mean that men are not part of the industry. It just seems to be more women than men. The second part is we want to assume that all the 10 students are on a subsidy. So that means that the provider has very predictable income, and it's predictable based on the provider doing certain things, updating their attendance and all the information required by Aussie so that they can get fully reimbursed. We're also going to make the assumptions that this particular family childcare home provider is rated as high quality, and therefore they have the benefit of being reimbursed at the highest rate available. Okay. That assumption is that they are on the food program. I know that providers sometimes hesitate to participate on the food program, but trust me, it is worth it. If it is, if you're having some challenges entering the data, please use technology, use software that can help you automate that process. You might also have to educate yourself on how to update that information on the Aussie portals, but take advantage of it. It can really help build your profitability. I'm also making the assumption that providers are also participating in the Pay Equity Grant Program. This is fairly new, but those participants that want to compensate their teachers and also get something for themselves, this is a supplemental that the DC government, the Aussie government is offering to providers to help them, number one, adequately compensate the teachers. Number two, ensure employee retention. We know that sometimes staffing is an issue in the industry, so you want to make the pay rate competitive. I personally have seen situations where the educators are moving from certain states to come and work in DC just because of the favorable pay equity program. And then lastly, you are running payroll because you do have an assistant. And when you're running payroll, you want to make sure that you're working with a reputable payroll company. There are many providers that are well known. And just me being a tax accountant, I cannot emphasize how important it is to work with a reputable company, not just so that they can run the numbers and send you accurate reports, but you also want to make sure that they're remitting these funds, these taxes that you're collecting to the relevant state offices. So just make sure that when it comes to payroll, you're just working with reputable companies. Now, at this stage of the training, I want to move over to the actual tool that we're going to use to create your budget. So Leslie, if you could give me the ability to share, I'll go ahead and share my screen. Okay.
Let me know.
Okay, I'll go ahead and share. Thank you. All right. I hope you can see my screen.
Yes, we can see.
All right, thank you. So, so the way we've built this tool is that you need to enter data on the assumptions page. That will drive the result of the budget. So you want to make sure that your assumptions are as realistic as possible. So we are looking at a family childcare home provider who is licensed for 10 students. And fortunately,
Miss Olga,
yes.
Can you actually zoom in a little bit to the tables so it could be a little bit more clear?
Sure. Is that better?
That's a lot better. Thank you so much.
Thank you. Okay, so we're talking about, so I have given the owner a fictional name, Sandra. So she's a family childcare home provider, and she has a capacity of 10 children, and she's able to fill up her business. She's able to fill up her family childcare home with the 10 students that she needs. Okay, she's also she's also has children who are 100% subsidy students. That means she's identified 10 students who qualify for the Aussie reimbursements, and so she's able to fill all her 10 spots. Another thing about Sandra's family childcare is that she's rated as high quality. And high quality means that she's being reimbursed at the highest rate. Okay. She has an infant class. She also has toddlers in her class, and she's also chosen to have preschoolers. Now, on this part, we are saying that she has 4 students that are infants, 4 toddlers, and then 2 preschoolers. Again, I will leave the technical part of the ratios up to Sandra, but here we are saying that Sandra has hired an assistant to help her run and take care of these children. She's not doing the before and after, but when you're on your own and maybe your school includes before and after, you have a non-traditional setup, or you have a full extended day, you can change the numbers based off of your circumstances. So remember when we looked at our ending goal, we wanted Sandra to make at least 200,000 in revenue. Okay, so with the reimbursement rates that now we know, and she's has the capacity for 10, and she's completely filled up all her spots. It appears that Sandra can make up to $221,000 in revenue for the year. Okay, now these numbers can change. So you can come in here and say, hey, maybe Sandra was able to get only 2 infants, and therefore she has more space for an additional toddlers. It just depends on your circumstances. But remember, we can only limit it to 10, or the numbers might change such that, oh, she's not able to enroll preschoolers, so she's at 0. So she has 2 spots available for her, and now the income is lower. So you can play around with the numbers as you wish, depending on your childcare. Okay, so in this case, we're just going to go back to our original numbers. So you have 4 students, infants, toddlers, and your preschoolers at 221. So that's great. She's actually meeting her goals. Maybe we're going to tweak the budget later as we know more information. I also mentioned that she's participating in the food program, another very important grant that most providers, I would highly encourage them to participate in. And in this case, her children are qualifying for the tier 1 level, which is higher than the tier 2. So she's able to get at least almost $15,000 in reimbursement. This will help offset her food budget. Okay, and so this will just improve her profitability because she will not have to compromise on the quality of food that she's serving for the children. Okay. We also mentioned that she's going to participate in the Pay Equity Fund for family childcare providers, and so she will get some supplement as well as the assistant teacher, and this will depend on their qualifications. You know, the CDA versus the associate's degree, but they will get reimbursed at certain levels. I would also recommend that as an owner of a childcare, a family childcare home, make sure that you are charging a registration fee. Again, there's a lot of administration work that providers do, and they need to be compensated. So in this case, we say, okay, you have your 10 children. We suggest that you charge a certain amount of registration, and this will depend on everybody's decision. Is 150 adequate? Could you bump it up a little bit? It really depends on your market and the parents if they're willing to pay the amount. Now, because you have a payroll, you have an employee who's in payroll, you're going to have to pay payroll taxes. Yes, payroll, when it comes to payroll, there's a cost to the employer. So there are certain parts of payroll that you have to remit to either the federal government or the state government. And in the DC market, sometimes I know that I see it very typical where you have your childcare based in the district, but sometimes you have employees coming in from Maryland or Virginia, so you have to consider those as well. In this case, I am assuming that you have a Maryland employee, and you are paying on average 10% for payroll taxes. So those are the assumptions we're going to make. We know that your income is about 200,000. You're also getting some subsidy for the food program. Pay equity gets a little complicated, but really what it is that you're going to enter the people who are providing the care, and you give them the rate of pay, and then the pay equity will give you a supplemental in addition to their pay. So we are here assuming that the owner is getting paid at that rate of 21, but then because of the fact that they're participating in the pay equity program, the family childcare home provider gets a total of $22,000 a year. Keep in mind, pay equity is paid on a quarterly basis, right? So when you're managing your cash flow, know that you're going to get paid only on a quarterly basis, but then you'll use that money towards your monthly payroll. Okay, so let's look at the various expenses that you're going to incur in your family childcare. The first one is going to be payroll. Okay, so we're assuming that the assistant pay is getting paid at a certain rate, and they're getting paid a supplemental based on pay equity. And so this particular individual is going to actually cost you, although you're paying them a gross of 38,000, you have to include taxes. So the true cost for this particular individual is 42,533 for the whole year. So whenever you factor in taxes, the cost of payroll goes higher. Now, in a family childcare home provider environment, it is very likely that the owner is either a sole proprietor or a single member LLC. They typically run the business and they are the 100% owner. And so they have sole proprietorship model, or they have an LLC, but they 100% own that LLC. And from a tax point of view, we don't really expect you to go on payroll, but we expect you to pay yourself a draw, like an owner's draw. And that is what I consider your pay. So as an owner of a business, you should pay yourself. You deserve it. And so I am factoring in an owner's draw versus a payroll draw. So there's going to be other expenses as well. So we've looked at the payroll expenses. And remember, we have the owner taking a draw, the employee getting paid through salary and payroll. You might also have contractors from time to time, like floaters to cover for you. Maybe your assistant calls off. You might have outside contractors coming in to help. You may have some sort of workers type of insurance associated with that, and payroll processing fees. So in this model, we are assuming that you are incurring additional staffing costs that is on top of the payroll costs that you're, the payroll taxes that you're incurring. So we have you paying $200 for workman's comp, outside contractors, and payroll processing fees. One thing to keep in mind is that whenever you're running a family childcare business, payroll is likely going to be your highest expense, okay? And so you need to make sure you're managing your cash such that you're able to meet payroll, depending on how often you're running the payroll. Then you're going to have your rent. Chances are you're running it from your home. So let's just set aside money that you pay for your rent. I'm going to explain to you later how this plays out, because if you're running it from your home, it's only a part of your rent that is truly a business expense, because you're using your home partly for business and partly for personal use. Again, same with utilities and repairs. Although I'm putting the total amount that you're spending on this budget, keep it at the back of your mind that only a portion of that is what is considered the business expense. Then we look at the program costs. Program costs are the costs you incur to run your family childcare business. So the food, the school supplies, do you have a special curriculum for your children? Are you offering things like, music lessons, yoga, and things of that nature? Are you taking trips? So you need to budget for your program costs. Be very careful, because this is where things can get out of hand. You buy this and that along the way, and if you don't keep an eye, you feel like you've overspent. So it's always a good idea to monitor your expenditure, especially on program costs, because sometimes they're one-off. They're not regular monthly expenses. Lastly is the administrative type of costs. So these are the fees that you pay for your lawyers, your bookkeepers, your accountants, your tax prep fees. My tip is please work with professionals. just leave the taxes to the professionals and focus on your craft, which is taking care of children. Because I know you do such a great job. I would hate for you to be distracted by trying to do your own bookkeeping on your taxes and just getting frustrated with that process. So don't forget the admin costs, but you want to keep it at a rate that is manageable for your organization, because at the end of the day, we are trying to be a profitable organization. So all these assumptions are going to feed into your final budget. I have based this budget on a 12-month period, okay? And so I'm picking up the tuition based on a 12-month budget. So, for example, what I'm saying here is that for every month you're making 18,000, you're receiving 18,000 in tuition reimbursements for a total of 221,000. Add on the registration fees. So that is kind of showing that we are meeting our goals. We were looking at 200,000. With the 10 kids, we are actually a little above our budget, okay? Consider also the food program. This is a grant. Make sure you follow the requirements of the grantor, enter the data on time, make sure you have good, clean records that show the attendance, how much food, what was served, who consumed the food, so that you can get reimbursed the correct amounts. We are also considering the pay equity grant. I have considered that you're getting it on a quarterly basis, just so that you can have a sense of what your cash flow looks like. So there goes your incoming money, which is the revenue. So here we are almost at 260,000. Remember, of that amount, almost 40,000 is the grants. Okay, sometimes grants are not guaranteed. So you really want to be cognizant of that, and you want to make sure that your center can run even if they don't get these grants. Now, let's look at the expenses side. We mentioned that you are a family childcare home provider. You may not be on payroll just because of your entity structure. That is a personal decision you make. My recommendation as a CPA is that you should take draws rather than running payroll, because you end up paying a little bit more on the payroll costs. The payroll, you notice that when you run payroll, there's a payroll tax cost. So take your owner's draw, determine how much you need personally as an individual to live. Okay, so here we are assuming that this provider can actually afford to take $5,000 for a total of 60,000 for the year. They also have to pay for their staff, and that's the cost is 38,000. But remember, we had a number of 43, but the reason was because now when you're paying payroll, you also have to pay payroll taxes, but these taxes are only for your teaching staff. As an owner, you're only taking a draw, so keep that in mind. We're also looking at the other expenses, which were detailed on this tab. And so your total monthly expenses are 18,319. Scrolling up here, we're making 25,000 on certain months. And I think those are the months when we are getting the pay equity. But on a regular month, you get 19,000. So for the most part, you're breaking even, and then you're also profitable. So when you think about it, your income is the 5,000, and then you also have net revenue of 1,300 for the month, which is pretty not bad. There are going to be months when you make more money, and I believe those are the months when you have the pay equity program going on. Let's look at the total net profit. So this is pretty good at 15%. Industry standard comes to about 9 to 10%. But as a family childcare home provider, in this case, this particular provider is actually a little above the industry standard. So that means that you can be more profitable in percentage-wise than the larger centers. The other thing you want to be cognizant of is your expenses. Keep an eye on that. Can you cut some of these expenses? If you're renting, would you consider a mortgage in a favorable location? What about the food? Can you get a better supplier that can reduce your costs? All these play into increasing your profitability. So I hope this is clear, and you can use this tool to change numbers around depending on your personal circumstances. So Leslie, could we go back to the slides?
Absolutely. Give me just one moment.
Okay, I'll stop sharing. Okay, so let's talk about managing cash flow. Very important that we are managing our cash flow. You want the revenue to exceed your expenses. When you see your revenue being less than expenses, then it may mean that you need to bring in more kids, do more marketing to fill out the space. Are you charging enough? You also want to take advantage of automation software. So whether it is tracking the food programs and how meals are served, or how you're collecting, attendance details, get as much automation as you can within reason. I'm not saying go splurge on all kinds of software, but just use every tool that you have to make running this process smoother. Could we go to the next slide, please? Okay, so the goal here is to be profitable. Even if you're a nonprofit, we want you to have a positive net revenue, because even if you're a nonprofit, the only way to sustain your operations and provide the good service that you're providing is if you have a positive net revenue position. So focus on enrollment, the marketing, making sure that you are filling the open spots. And number two, that you are also getting reimbursed on time. You're working on your quality rating if you happen to have subsidized children, or if you are on the private pay module, you are charging adequate fees for your demographics. It's also very important to make sure your enrollment is up to date, like you don't have empty spots unnecessarily. Sometimes having empty spots means adding a new employee, and that is fine because you have more children, but you do have more expenses, but net, it should be a positive outcome for you. Constant adjustment, constant monitoring, very, very key for a family childcare home provider. You want to make sure that at the end of the day, your work pays off for you. Next slide, please. Okay, so today I also want to talk about the time space calculation, because this is unique to family childcare home providers. I bring this up because you think about, you work hard, you're taking all manner of risks providing this care for your children. Chances are you're not doing a 40-hour work week, it's possibly maybe 60, because you are the one that opens up your home daycare early before the children come in. You do the meal prep, and after the families leave, you're probably doing the cleaning, making sure you set it up for the following day. So what I want you to make sure is that you're tracking certain specific numbers. This will make it easier for you during tax time, and that's the time space calculation. So in this particular niche within the industry, the IRS understands that you're using part of your home to provide a needed service. And what they have decided is to give you a generous home office deduction. And that's what the time space deduct calculation really is. You're using part of your home, you're using a big chunk of your house, and therefore the IRS wants to give you some relief in terms of how much money you can write off. So for the time space, I'm going to ask you to track certain numbers, one of which is how much space in your home is exclusively used for your child care. Leslie, if you could move to the next slide. So yes, well, I'm just going to go very quickly on the component of time space. But the bigger picture is this. Think about the amount of space you're using for your family childcare home. Okay, how much of that space is exclusively for the childcare? You may have a basement that is just for childcare. Nobody else uses that space, even when the kids are there. So nobody else uses that space, but it's just exclusive for your business. Take note of the square footage of that space. Okay. Then also takes note of the areas that are partially used for the business. This could be hallways, it could be your kitchen because you're using your kitchen for prepping meals. Okay, so of course you use the kitchen for prepping meals. You might also use the kitchen for prepping your own family meals. So that would be partial use. We still need this information to be able to get to this particular time space calculation. We also want to know the total square footage of your home because that is the basis on which the calculation is based. I know it's a lot, but just keeping track of these two items. How much space is exclusive for childcare? How much space is partial for childcare? And remember, you only have to do this one time and present it to your accountant. So don't worry about the complication. It is something that will benefit you in the long run. Okay, next slide. The other thing you want to consider is the business hours. You do have your operational hours. You may be open from 7 to 5 p.m. in the evening. However, as a family childcare home provider, I know that you're waking up maybe an hour, 2 hours before the business opens. And when the kids have been picked up, you're probably also working maybe an extra hour to clean up and prep the room for the next day. So it's very important to track these hours. Again, it's for your own benefit when you file your taxes. So if you have at home, like you're doing some admin work, entering data, making sure you're making the correct applications for your reimbursements, that time needs to be tracked. Why? Because it will help lower your tax return at the end of the year. Keep in mind, there are certain rooms in your home that are not used for childcare at all. You're going to exclude that from your calculation. Personal hours that you're using with your family, that is also excluded. We just want to know your business hours and areas in your room that are used for the business. Next slide. Next slide, please. So there's a formula, but don't worry about the formula too much. You just need to track these hours and the square footage. That is what you give to your accountant. Typical businesses that have home office typically don't go beyond 7 to 10% of their home office deduction. But for a family childcare home provider, you get a more generous deduction. In this example, this person got 53% of their home office deductions. So just think about it. If you're paying $4,000 mortgage a year or rent a year, 53% of that yearly mortgage is a write-off on your taxes. That saves you a whole lot of money and makes sure that you're keeping some of your hard-earned money in your pocket. So keeping track of these numbers is only helpful for you and your businesses long-term. Next slide, please. So I know it's been a lot, but remember, keeping track of your numbers, working with the end in mind. And once you've determined your profitability, figuring out your time space calculation, that will only help you in the long term by lowering your taxes and therefore ensuring that you're keeping more money for yourself. After all, I know working in the industry, it takes a toll on you and you want to make sure that you have something to show for it. I would urge you to take action now. Start playing with the tool as soon as you get it. Start thinking of 2025 budget. What numbers are you looking at? Are you looking to fill up the empty spots? Do you have a waiting list? Look at the ages of your children. If they're going to age out, do you have new children that are coming to replace them? I like infants. I mean, the idea of having infants, I know it's a lot of work, and I wouldn't even imagine how your day goes. But if you have infants, you know you have them for the next 2 to 3 years, so you can plan better with families that have kids coming up. So take action now. It will only help you in your business. Next slide, please. So in conclusion, I would say let's make 2025 the best year so far. Look at your numbers, look at the gaps. If you don't know what your current numbers look like, do a trial run. Look at the last 3 months of your business expenses. How much money did you spend on different categories of expenses, utilities, rent, mortgage? Is there anything you can do to reduce them? That way, you have a good run rate of what your expenses can look like. You have an idea of what your income is going to look like. Do you need to get to the point where you're a high quality? Do you want to start adding slowly private pay? This is the time to look at those types of scenarios. And hopefully, this helps you with your budgeting process and making you as successful as you can be. Thank you.
Thank you so much, Ms. Olga. We are going to open the floor up to our participants. If you have a question, please feel free to drop it in the Q&A box. That will allow us to save all the questions, or you can raise your hand and Ms. Olga will be happy to answer your questions. So I'll give some time if you have a question in mind, and then we'll go ahead and go through Q&As. Thank you, Maria. I see your hand up, so I'm going to go ahead and unmute you.
Yes.
We can hear you now, Maria. Go ahead.
Okay. How you can find the right accounting?
Can you repeat that?
How you can find the right accounting que is familiar with family daycare?
Miss Olga, do you are you understanding the question?
I
Yes.
think. Oh, go
Go
ahead.
ahead, Olga. You heard her question?
Yes, I had the question. I think she might be wondering about working with a bookkeeper or a tax professional that is familiar with the childcare business.
Yes.
Is that okay?
But
Yeah.
sorry, specific with family daycare.
Family daycare. Yes, family daycare has very specific nuances. And I think one of the big one is that time space percentage. So what you want to do is when the first thing you want to remember is just keep good records. Just keep good records. For example, in a family childcare or home provider situation, one thing I always suggest to my clients, just have a separate bank account for your business. That way, you know how much money is coming in and how much money is going out. Also, when you choose like a bookkeeper or a tax professional, try and work with somebody who's kind of familiar with the industry or is willing to learn about the industry. That's just because it's a little nuance, because you might have to put up a fence just so that the children are in a protected area when they're outdoors. And you want to understand what is the impact of investing in certain things in my childcare. So what I say is try and research on the professionals you're working with, and hopefully they understand the little nuances of a childcare, running a childcare business, especially a family childcare home-based business. And where you feel it's lacking, just bring it up. And a lot of times professionals are actually willing to educate themselves on how this whole process works. But truly, to get the best option, I think it's best to work with somebody who is a little familiar with the industry.
And Maria, we will be providing Miss Olga's information at the end if you would like to reach out directly to see what services she offers.
Oh, that'd be perfect. Thank you.
Thank you. Do we have any other questions? As a reminder, we will provide this recording. It is going to be put up on our YouTube channel. So if you lose the recording in your email, you'll be able to search it easily on our YouTube channel. I will provide all the information in the follow-up email. The budget template that Ms. Olga walked you through is going to also be provided to you so you can see within your own time what the example was that she provided and how that works. This is DC specific, so you will see that in the budget template, it is for DC, and it has specific like calculations for the tax portion. So please keep that in mind when you're looking at it if you need to make any edits. I'm still going to leave the floor open if you have any questions. In the meantime, I am going to put up Miss Olga's contact information. This will also be sent to you via email. I don't see any questions in the Q&A or in the chat. Miss Olga, do you have any closing statements, or Vashon?
I just would like to thank Miss Olga for a wonderful presentation. I'm hoping that everyone is walking away with a great tool and some good information that you can take with you to help sustain your business, your family childcare program. So thank everybody for joining us today.
Oh yeah, and I also want to thank LIIF for this opportunity. I think the DC market is very unique to childcare, and there are some programs that, as a family childcare home provider, you can take advantage of. And I also sense that the DC government, LIIF, they want to support you to be more, to be successful in your journey. And for me, what I care about is the children, making sure that they're in the safe environment, they're getting, good nutrition, they're getting the education they deserve. And so as an accountant who looks in from the outside, I just want to say thank you to all the providers. I know you do a lot of work, and hopefully, as you provide these services, you get, the joy of working with children, but also having a profitable business.
Thank you, Miss Olga. We appreciate you joining us and sharing your expertise and giving DC specific examples. I think that's very helpful and applicable for our providers. I'm not seeing any other questions, so we're going to go ahead and wrap up about 8 minutes early. A survey will pop up once we end the webinar or you log off. And you will also receive a follow-up email tomorrow with the survey link if you're not able to finish once you hop off. Again, recording, PowerPoint, and the budget template will be sent to you. Thank you all for attending. Thank you again, Miss Olga. We appreciate you.
Thank you.
Have a good day.
Thank
Bye-bye.
you, everyone. Bye.